Welcome to our podcast series, Talking with Traders, hosted by expert trader Garth McKenzie in London, from where he's interviewing various guests on the topic of trading.
Welcome back to another season of Talking with Traders with me, Garth McKenzie. This is the 6th season of the podcast, and we're into our 3rd year since the podcast began in 2020. Once again, IG have come on board as sponsor and agreed to fund this podcast for another season. We really are privileged to have such a global leader in CFDs trading as our podcast sponsor. Over the coming weeks, I'll be interviewing various guests from around the globe to bring you their market insights. I'll be digging in to find out what makes them tick, how they see the markets in the year ahead, and what techniques they will use to succeed in the markets. Some of the guests will be returning guests from previous seasons, and some will be new guests that I've managed to convince to join me to give up their time and share their insights. As we enter 2023, there's as much uncertainty as ever around where the markets may be headed in the next 12 months. We've just come off a horrid year for investors in 2022, where a typical 60-40 portfolio delivered its worst annual return in several decades. But what of 2023? Will the US lead the world into a global recession, or will the central banks manage to achieve a soft landing for the global economy? Will inflation come under control as base effects kick in and supply bottlenecks open up? Will US earnings hold up in the face of a weak economy, or will they disappoint? Will we see continued weakness in the US dollar? I'll be asking these and many other questions to my guests in the coming weeks. The idea behind these podcasts is for you to get a variety of views from a broad spectrum of market professionals. None of this is intended to be seen as financial advice, but it is intended to get you thinking and to weigh up what possible paths the market may follow in the year ahead. Please remember to subscribe to this podcast in your favorite podcast app. That way you'll be notified of upcoming episodes as they get released. Once again, thanks to IG for sponsoring this podcast for a 3rd consecutive year. Thanks for joining me, and please enjoy Season 6 of Talking with Traders. Welcome back to another episode of Talking with Traders, and this time it gives me great pleasure to welcome a new guest to the show. I met him last week at a conference in London run by the Society of Technical Analysts, the STA in London. His name is Stephen Hoad. He's better known as the Stop Hunter, got a wide YouTube following and general all-round good guy and very successful trader. Gave a great presentation at the STA conference last week, which is a conference on systematic trading. Stephen, welcome to the podcast.
Thank you, Garth. Good to meet you.
Yeah, well, good. Yeah, thank you. Thanks for coming onto the podcast. I appreciate it very much. And I'm sure the listeners will as well after the end of this episode is finished recording. Give us a bit of background, Stephen. I always do this with new guests. A little bit of background into where you come from, what path your career has followed up until this point.
Okay. Goes back to the mid-90s. That's where it all started. Worked for an investment bank called Merrill Lynch in their fixed income department. And then that's all in London. And then sort of hopped around a few places. Japanese bank called Sanwa in equities, and then a German bank, West LB, in, call it complex derivative type products and markets. And then for a big chunk of my career, I worked at a company called Coke. That's KOCH, not to be confused with the drink.
Or the drug.
Yeah, exactly. A big commodities company in the US. And there I was like a strategy designer, portfolio manager, trader, working in metals, energies. Did very well for myself there. Allowed me to retire in my late 30s from the world of trading.
Yeah.
And I thought I was going into retirement, but after my wife got a bit bored with me around the home and everything, and actually, that's just me being silly. Actually, people would ask me to trade their money for them. I said, no, I'm not going to do that for you. It's just going to get messy. So I'll teach you how to do it instead. And that's where the Stop Hunter comes from. And that's where it got founded as a as a company at the time, and we did a lot of UK-based classroom teaching. And on the side of that, I sat the STA exams for technical analysis, and I got a pretty good mark, and they asked me to do teaching for them as well. So I teach on the diploma program there at universities. So I had an educational business for a while. But as you might be aware, when you go into the educational space, people will say, well, you can only teach, you can't trade. So to sort of shut down the haters, I built myself call it systematic Renko-based trading system, ran it for a year in a live environment, got a 300% return, just to prove that I still had the touch. That did pretty well. And actually, off the back of that, I did some work with the US hedge fund who liked it. They audited the whole set of results and everything, like what I did. So I do a lot of consultancy work for banks and hedge funds, and coming up with strategies, ideas, just all sorts of things trading. Then we had lockdown, which impacted obviously the classroom type business, and from there I sort of went more e-learning style. So we put a few courses onto a platform called Udemy that took off, sold to about 40 odd countries around the world. And also at the time, I thought I tinkered with YouTube, and my kids said that I was too old for YouTube. So I'm very competitive. So I said to them, I'm going to, get monetized on the channel within, a year, which we did. And, we're running about 3,500 subs there, and it's growing nicely. Give away all my stuff really pretty much for free in that space, because most of my income and returns are made by trading. So I still trade for myself. We have a copy trading service. So I run my own accounts, and like I say, I do consultancy work and other bits and pieces. Got a academically, like I say, I got the STA qualification, got a master's degree in quantitative finance, first degree in economics, love sport, and here I am talking to you guys.
Yeah. Well, it's great to be talking to you, and thank you very much for that background. So one of the things that got me wanting to chat to you when you met me, or when I met you at the STA conference last week, was that 300% return. That when I heard that, I thought, this guy's interesting. I've got to chat to this guy and find out. And I asked you the question in the conference, but I'm going to ask it now for the benefit of the listeners. A 300% return is phenomenal in anybody's language. And a lot of these type of investment championship type of things, where you get guys that come along and make these astronomical returns, several hundreds of %. I often think to myself, okay, but how realistic is this? And is this with a fully funded account, or was it just a 10 grand account that you swing for the fences, and 98% of the participants will strike out and 2% will make a hell of a lot of money and look like heroes? So I'm going to ask you the question again for the benefit of the audience on this podcast. That 300% return, was it on a fully funded account, and is it repeatable?
Yeah, well, it was fully fundable. It was a very big account, trading my own money and running it through, like I said, a sort of a MAM fund type setup as well. So I had a big number. I won't disclose the number, but it wasn't small, and it was utilizing really the techniques that I just have been using for many years on the trading floor. And it's a fair enough question. You can obviously have outlier years. And, I've got to say, again, audited results averaged probably just under 100% since that over the last 5 years, ranging from a low year of 50%. That was the top year. But, I've had, other good high years as well in between. So it has been repeatable as well.
Yeah, repeatable and audited as well. And as I understand, a lot of what you do is on YouTube. I've had a look at your YouTube channel and seen it. So it is all pretty transparent. It's there for people to see and to follow you. Yeah,
exactly. I really, my whole remit is just to put out there what I've done. If you like it, you like it. If you don't, you don't. I prove it. if you doubt me and question me, it's all backed up from
Yeah.
stats and data.
Yeah.
Brokers or accountants, whatever you like to go through. It's there because I want to be as transparent as possible to show what can be possible if you put your mind to it.
Yeah, absolutely. Well, look, listeners can get onto your YouTube channel and they can do your courses and whatnot. We will give that a punt at the end of the podcast. But I want to talk to you about your general style of trading, because obviously we know that there are so many different styles. You can be a day trader, you can be a position trader, you can be a quant trader, options, various different things. What is your style of trading typically?
That's a very good question, because when I moved out of, I suppose, call it the professional space, to the retail space, there's a lot more names given to a trader, like say swing trading, day trading, whatever, scalping.
Yeah.
In the professional world, I was probably more called just a proprietary trader.
Yeah.
And inside that, what is my style of trading? I never really bucketed it like scalper or whatever. I come up with strategies and ideas based around all sorts of things: behavioral science, technical analysis, fundamental analysis, and you would put them into all different sorts of time frames, utilizing maybe different technical analysis techniques. I specialize in Japanese charts, for example, and really I put them together in a portfolio, a bundle, and then I'm optimizing the results through risk management, techniques, that sort of thing, even gaming theory, to get the sort of ultimate portfolio return. So it's very hard to categorize me as one sort of style. I would say it's a blend of all sorts. I do a lot of options trading as well, so on US stocks. That's another, I've been an options trader professionally, and I took that into that space as well. So in terms of, I suppose, if you want to categorize length of trade, then my trades the sweet spot, because I keep stats on everything, is between seconds to about 8 days.
Okay. All right.
After 8 days, it becomes 50-50. And then I manage the trade in a certain way to, draw it to either a smaller, minimize the loss, or maximize whatever I can out of it. So I know between 0 and 8 days, I have a bunch of strategies inside of that.
Yeah. Okay.
That probably hasn't really helped you answer your question at all, but
it does and it doesn't, right? Because it just shows that there are so many different ways to trade. There's not one, there may be. What I always think is there's different ways that suit different personalities, and I guess that's what it comes down to. There's not one right way, and there's not always a wrong way. There's lots of wrong ways, I suppose, to do it, but there's also lots of right ways to do it. And it's about coming back to finding an approach that fits your personality and fits your style.
Yeah.
And that name, the Stop Hunter, I'm intrigued by that, because does that talk to any part of your strategy or not? I deal with a lot of retail clients, and they always have this belief that the market makers are out to get them, and the stops are being hunted, and if you could just be on the other side of the stop losses, you'd always make money. So is that just a name, or is that part of a strategy that you employ?
There are some sort of strategies in there sort of around that, but that's more around going back to that behavioral slant, how the market behaves and where it thinks about putting stops, and using tools like Fibonacci or pivots. There's some really obvious stuff in there, but the name, purely accidental, really. It was when starting the business, playing with my friend on the golf course. He was a Hollywood director, sort of thing, and we needed a catchy name, and we coming up with some absolute rubbish on the golf course. And then we sort of said, well, sort of threw out the Stop Hunter, and he went, that sounds a bit sort of Terminator-y, Arnold Schwarzenegger-y sort of feel to it. And I said, well, it's got a meaning as well. So in my world, so we sort of just stuck with it, and it had a catchy sort of feel to it, and it stayed.
Yeah,
really, but well, it's not Yeah, my whole thing isn't just about scalping, stops. No.
Well, it certainly is a catchy name, so you got that right. Yeah.
Thank you.
And when it comes to technicals now, I mean, technical analysis can be very complex if you want it to be.
Yeah.
There are hundreds. So when I look at my technical analysis platform, there's hundreds and hundreds of different indicators, many of which I don't even know what they are. And to be quite honest, I don't ever really have much desire to find out, because I think that keeping it simple is better. I found the indicators that work for me, and that's fine. But and most of the other successful technical analysts / traders that I've followed over the years, the one thing I seem to find they all have in common is that their charts are quite clean, not excessively complicated with all the indicators all over the place.
Yep.
So what is your view on this? And can you maybe give a basic idea of what
Sure.
of what your charting template looks like and the technical analysis tools that you use?
Yeah, no, I would say you're right. Keep it as simple as possible. Now, I started off back in the mid-90s when you had to draw your own charts and stuff like that. So you learned the hard way what goes into a chart.
Yeah.
And then when I moved to the Japanese bank, I learned about the Kagis and Renkos and Ichimokus and that. And first of all, I thought a complete mess, but I dug into it, actually found I quite enjoyed that style, especially Renko, because like you said, it kept it simple. It cleaned out all the noise and showed me the trends, the up and downs, quite more transparently. But over time, technology and software has developed a lot more. So what I now do is I take some of those Western techniques that we're familiar with, stochastics, whatever, and then I marry them into the Japanese sort of more clean type of chart. The Renko chart takes away time as well. So that's what, when you ask about how long my trades last, really, I don't care. It's down to the price movement. And if you looked at one of my charts now, there's not many indicators on there. Say for a Renko chart, it might have a moving average and a stochastic indicator, maybe a Bollinger Band or breakout, depending on the strategy. But it is 2 or 3, 4 indicators on, at most. So I agree with you. Keeping it as simple as possible, in my experience, has created the most effective returns.
Yeah.
You put too much on it, psychology comes into it. You talk your way in and out of trades. Is that the right? That indicator's telling me buy, that one's sell, or you become inconsistent and don't get the returns. And also on top of answering your question there, I back test everything and stress test it all. So I know, that just this simple approach will give me X at the end of the day. So I don't need to be tinkering, adding and taking away. It works. I trade it.
Yeah.
Just get on with it. So it's as simple as possible, really. It's quite clean.
That's good. Yeah. I mean, look, I know there's an inverse relationship between the level of complexity of your charts and the level of success, I find. And those people who I find with charts that look like spaghetti or lines all over the place that look like a game of pickup sticks that my kids play doesn't really work to make it so complicated.
No, I totally agree with you. You can make it too messy and it just kills. It's nice for analysis, maybe if you add more stuff on, if you're not trading it, but for the actual, doing it, effect, I think keep it as simple as possible.
Yeah, absolutely. And once you've done the analysis, then obviously the next thing is the risk management. So what is your approach to risk management? A lot of trading books talk about the old 2% trading rule. You don't risk more than 2% of your capital on an individual trade. I've spoken to a lot of people on this podcast, and a lot of people seem to do it differently. The one consistent thing is obviously that they seem to keep risk very small, but what is very small? Is it 2%? Is it 1%? Is it 0.5%? Is it less than that? And then some traders will create a pot of short-term trading pot, which they then will risk the farm or bet the farm on that particular pot. What's your approach to risk?
It is like you say. When I was on the professional trading desks, the risks we were taking compared to the money we had deployed was very small, and I've sort of taken that over to the current environment that I trade in. But I suppose anything between 0.5% and 1% on a trade, because you've got, if I'm using 1% per trade, then you've got 100 goes of getting it wrong, and that's statistically almost impossible to blow up your account from. But I'm not just going to stick with that 1%, because I then use things like gaming theory, preference function, return economics, portfolio optimization, and I scale up trades and strategies according to how successful they are. So if the probability of something winning is higher, I'll be a lot bigger than that 1%. If it's smaller, then I'll tone it down from maybe that 1%. So in the end, you've got like this nice P&L, profit and loss line that you've created on the portfolio due to different trade sizing according to the probability of success with various like underlying theories. So that's my approach. If I'm just doing outright trading, if it comes to options trading, it's a different matter again. But for outright price movement, then that's how which is most people with their CFDs or spread bets or outright stock positions, say, or FX, then that's how I do it.
Okay. All right. So it's kind of a dynamic trading, a dynamic risk approach, I guess. There's not one firm answer to it, right? Okay. And you mentioned previously.
I used to work in,
yeah, sorry to interrupt you. Go on. You go on.
No, so I used to work in a risk optimization area as well, where we learned all these techniques where we'd have work with the traders. They might have a great idea, but they're not maximizing their profits to the risk there. So I employ a lot of those techniques, which you can still use quite practically in the retail world, and they work very nicely.
Okay. All right. Good. You mentioned earlier that you keep stats on everything, and so your average win loss to win rate, loss rate. So I just want to ask you that if you're available to divulge that. I mean, what is your win to loss rate first of all on trades historically, or I mean, if you take it over the last year, let's say.
Okay, so it ranges between 70 and 80%. The win loss ratio.
Okay.
And then that's I find that number's meaningless unless you know what the risk return number is, because you can win 7 or 8 out of 10, and the 2 that you lose or 3 you lose blow away the others. So you need the risk return number to fit into that formula as well.
Well, that's right, and that was going to be the next part of the question. Is then if you're winning on 7 or 8 out of 10 trades, what's the average winning percentage on a trade versus the average losing percentage?
Okay, this might surprise you. It's roughly probably 0.5 to 1. So for every £100 risked, making £50. So I look for maybe up to 1 to 1, but I'd say on average it's 0.5 to 1. And that's because I run that high win rate. If I didn't have the high win rate, that's I'd fail. But I know that I've got that, so I'm quite happy to run those trades. It's been tested at those levels.
Yeah, that it is interesting, and it is a surprise. And I guess it would surprise a lot of listeners to hear that, because a lot of the common wisdom or the common sort of thinking is that you want to keep the losses smaller than the profits. So you'd ideally want it the other way around, where you're making 2 times more on your winners than what you're losing on your losers.
So I think of it like, you're the casino owner, not the punter.
Right.
Because you'll get in a casino, 1 in 100 people's gonna win big, but it's the 99 that are gonna lose, that make the casino owner more money than that one bloke that's taking a bit. So I think of it more like that when I'm doing my trading and risk management. It's like the casino owner approach, which then gives you that lower number, but it's more consistent. You get higher win rate, and the returns that I get. And it's sort of what we did on the trading floor as well. It's that type of approach. So.
Yeah, it's very interesting and it's very unusual. So I think I'm finding it intriguing. And you mentioned holding time. So you said it could be anything from seconds to a couple of days on average, or typically.
Yeah.
What is the typical holding time?
Yeah, it is. I would say it is that 0 to 8 days, but on average, 3/4 of a day probably. In terms of actual time held for the trade, if you looked on the big average. So it's not very long.
Okay. Now, a lot of listeners to this podcast will be part-time traders who are wanting, or they have a dream about giving up their day job to become a full-time trader. Yeah. And obviously that's what you've done, right? But you, by your own admission, you've made a lot of money very young in life, retired in your late 30s, and were able to come at it from a perspective of being very well resourced and also having had a lot of experience under the belt. First of all, I mean, was it a challenge for you psychologically to now take on trading full time and no longer have that safety net of a salary and maybe a bonus coming in from a big corporate organization? Or did you find that you just took to it like a duck to water?
I sort of started where I left off, really. I tried not to change my mindset at all. I can see why it's harder, just being a retail trader with no experience. But I took all the skills and knowledge that I learned and said, well, I've got to do it the same. And I just sort of did. And I know there's the pressure on, I suppose, people turning full time. Got to pay bills and, the lifestyle that they want to get. And that adds extra pressures. But I tried not to factor that in. It's a job and I had to get X return, and I was going to do it the way I always had, and it worked. So.
Okay. All right. And I know you mentioned to me when we were chatting at the conference the other day that you're a very competitive person. You played cricket at quite a high level, I think you said. Does that factor into your trading personality?
Yes, it does. Yeah, I hate to lose, but I suppose one of the big tips I tell people when I'm doing this sort of thing is I've learned to lose as well. I hate to lose, but I've learned to lose properly, and it's made a huge difference. Yeah, you're right. I would play cricket to a high level, but I do mad things as well, like run marathons, do Ironman triathlons. Low handicap golf. If I do something, I'm going to do it properly, and I'm going to try and do the best I physically, mentally can out of it. And it's that same mindset that's worked in trading. I think it's helped that I've been on the trading floor where you're with other like-minded, highly competitive people. But I always trying to seek a solution to a problem, or have a workaround or something, gets you that edge. I'm always looking for that edge in the trading, and however that comes, a legal edge, I will say, but an edge, and I think that comes from that competitiveness to want to win.
Yeah.
So, but not at all costs, because if you go out, I see people with big egos going in saying it's easy to trade and If you go in with that winning, that sort of mindset, without the plan and the experience, you're going to blow up and lose it all. It's smart thinking rather than an ego type thinking.
Yeah. And we know that the reality is that the vast majority of people who do try and trade for a living don't make it. And the percentage of losers is very, very high in this business.
Correct.
So yeah. And what is your typical daily routine?
80 obviously.
Yeah, 80 odd to 85% is typically the number that gets bandied about of those who don't succeed at trading their own capital. And obviously that's also not to say that the other 15% are all flying around in helicopters and living on yachts. There's
They're not.
they're not. That's just the marketing hype, which is all nonsense.
Yeah, that is a
But-
very small. It's not even a 0.01% of traders that are doing that. You can have a very nice living trading, and you never get to that.
Yeah.
That point whatsoever. So
Yeah.
like you say, I call them the Lamborghini marketers. When you
Yes.
see them on
Yeah.
YouTube.
Yeah.
It's
Yeah.
not as easy as that. It's a profession.
It is. It is a profession, and it's also never as glamorous as what they make it out to look like in the marketing. So, yeah.
Correct. Yeah. I
And-
don't have a big office by the beach. No.
No. And in terms of that not glamorous side of things, tell us what your daily routine looks like, because that's also the
Sure.
non-glamorous side that people don't see. Yeah. What does your daily routine look like?
Yeah. So it's still the same really as what it was when I was working for, other banks and institutions. I'm up probably 5:30 in the morning. And I've checked things straight away. I never trade on my phone, but I'll have a look and see what positions have done overnight, because I'll keep, if I haven't closed out positions, I'll keep the risk on overnight as well. A typical day, get up there, try and go to the gym first thing to like burn out, the aggression. You've got to keep healthy and on it. So the physical side's just as important as the mental side. That'll be a swim or just weights or something like that. Then come in. I live in Canterbury in Kent, out of London now. I have a home set up, but I try and get away from the home as well. There's too many distractions. So I've got an office in town that I will physically walk to as well, to give me the exercise as well and clear my head before I get going. And then it's coming, I've got loads of screens. And what I've tried to do over time, the skill I've learned is programming since leaving the city. So I try to automate as much as my trading as possible, or systematize it as much as possible. So I'm spending as little time as possible on the screens. I'm still spending quite a lot of time there, but not as much as I did, because I want to do YouTube videos. I do things like this. I do analysis for other institutions, and that's so I've got to fit in other stuff around it, like someone would have with a job. So while I'm speaking to you, I'm trading as well, but I'm not, obviously you're going to see me pressing buttons or doing anything.
Yeah.
So I come in, I'm looking, I'm a multi-asset trader, so I'll be looking at FX, good first thing London time in the morning, UK European stocks, then a sort of a lull late morning, so that allows me to catch up on emails and stuff like that, and then build myself up for the US session around 2:30, trading other stuff like oil, commodities, US stocks.
Right.
And I will be here probably till 7:00 at night. And if things are still getting exciting, I'll probably be here until later. So not back home probably till 9ish.
Wow.
So it's still a long day.
Yeah.
It hasn't changed, but you have to be in that space. Again, you're talking about keeping the stats. I'm analysing everything as well, back testing, building systems, throwing in around that trading stuff, while it's doing its stuff. So it's a busy day. Still Monday to Friday. And I don't do weekends. I have a rule that I don't work weekends at all. That's my time, go off, do sport, family, whatever. Monday to Friday, I'll do as many hours as it takes, but weekends completely clear.
Okay. Very interesting. And how do you find balance in life then? That's a very long day that you're working from 5:30 in the morning till sometimes 9:00 at night. You treat it as a business. You obviously treat it very seriously that you're putting in those hours. But of course, there does need to be balance. Now, you've mentioned that weekends are for rest and family and enjoyment. Yeah. And outside of that, how do you find balance between this hectic world of trading and living life?
It's a very good question. So I suppose trading has been my life ever since I left university. So it's always been a part of it. And one of the things that's important, I also ask people when they say I want to be a full-time trader, is do you enjoy it? Do you actually like trading?
Yeah.
And because I enjoy it so much, I suppose it just becomes a natural part of your life. It's not a drudge to get up in the morning or spend the hours doing it. So I don't mind doing it. Once it starts feeling you mind doing it, then give it up, go and do something else. But like I said, with my competitiveness, I like to go and challenge myself to random things that will take me completely away from that picture, like doing an Ironman. That was a one I did a few years back, and that got me into a different zone altogether. So I'll have a hobby or hobbies on the sideline that will distract me completely from the trading and allow me to focus there. But like I say, it's a tough balance. Monday to Fridays, it's a tough balance. But I've got 4 children, and I try and give as much time as I can to them. I still got to do the day jobs when I get home.
Yeah.
And then balance that weekend for myself, that I need my own sort of mental space and the time back to them. So really it's 7 days a week, full on, non-stop, because it just has to be, I think.
Yeah, that's life. Okay. Super. And we all have ups and downs in trading, it can be a roller coaster of emotions. When the tough times come around, how do you deal with that? If you've had a string of losing trades, and maybe you had a bad week or whatever, what do you do to get on top of that and to remain emotionally strong and mentally tough?
Yeah, that's a good question. And like you say, no trader wins all the time. They're going to have bad months, years, weeks, that sometimes you just don't know the period. And I suppose the thing that's got me through that is the statistics that I keep, the data. So when you know that you can lose 10, 12, 15 trades in a row and it's still going to be okay, that takes away some of the mental, downside of trading. I know, through decades of trading and doing this stuff that, if I hit a certain drawdown number, I know I'm still comfortable with it because I've seen it before. Or if it's into a new zone, or something outside the comfort zone, I'm analysing why I'm in that zone and making the right changes around risk management to keep me sort of in the game, sort of thing. So do I take some risk off? Do I move into different assets? It's constantly being on top of it, and really, you've got to, like I said to you earlier, you've got to learn to lose and lose properly. And if you can do that, it makes it a lot easier. You're not going to win from the word go, and managing the losses and the expectations around that for the psychological side of it is massively important. If you can get your head around that, it makes trading a lot easier, and you find out a lot about the person when you get into those zones. It's tough, it's like anything. Running the London Marathon, when I did that, I got to the 23-mile mark and it was hurting. But it's I didn't stop. You've got to keep pushing through it because you can see the finish line. But I'd never been in that zone before, but it's how you cope with it. What's your strategy around it? And I suppose it's having a plan in that trading.
Yeah.
If you've got a plan, you know how to lose properly. You expect that it's not going to be just all plain sailing. Then a level of realism in there as well. Then I think you should be fine.
Yeah. Brilliant. All right, Stephen, we're heading towards the end of our allotted time. So at this point, I also want to give you the opportunity to just let the listeners know, how can they follow you and how can they follow your work? Tell us about your copy trade service, your YouTube channel, the courses. Give it all a punt as much as you like.
Okay. Okay, if you want to follow me on YouTube, the handle is @the_stop_hunter, and pretty much all my learning is on there for free. Pretty much as much experience as I can download, it gets chucked in there. Also, if you've got ideas and suggestions, put them in the comments, and I'm happy to build videos and content around that. And I said I did have some courses on Udemy, but you can probably find most of them now on the YouTube channel. So if you want to do the e-learning, we have actually mentioned that we've got a great playlist called the Ultimate Free Trading Course. If you find the playlist on the channel and work your way from top to bottom, you pretty much get an intensive, course on everything from risk management, the different markets, different technical analysis things, the things that I've used and worked for me. So really, if you want to follow me, the Stop Hunter on the YouTube channel is the best place to go. And then you mentioned the copy trading. If you haven't got the time, or you want me to trade for you using the stuff we've talked about in this podcast, then there's a couple of videos on the side. There's a playlist as well called Copy Trading. It tells you all about it, the expectations, the returns, what we do, and how you actually sign up to the copy trading. There's no minimum trade, no minimum amount. I think there's about $100 that I'd advise if you want to do it. Over 1,000 and upwards, but only risk what you can, as they say, afford to lose in if you want to go down that way. But it's my trading 24/7. It's a reasonably new service that I've offered out because the retail market doesn't often have that sort of, I'll call it like hedge fund exposure. You need millions of pounds of regulation to get into that space. So I'm just taking what I've done in the professional space and try to find the tools in the retail space through brokers and copy trading platform software, put it into one, offering it out there, and it's all there. You can email me if you want to learn more as well, info@stophunter.co.uk. But I say it is all, everything you'll find is on the YouTube with contact information as well. So that's my punt of the day, Garth.
Fantastic. Well done. Thank you very much, Stephen. It's been a great pleasure speaking to you, and I've thoroughly enjoyed it. Thanks for agreeing to take the time to speak to me. And
John, thank you for inviting me and having me.
Yeah, and we'll connect again soon, no doubt. Thank you very much.
Yeah, brilliant. Yes. Thank you, Garth. Speak to you soon.
Cheers.
See you later.
Thanks for joining us for today's episode of Talking with Traders, brought to you by IG, a world-leading CFD provider. We really are privileged to have such a leader in the field of online trading involved in this series. Please follow us on Facebook and engage with us there. And a reminder to make sure you subscribe to this series by clicking on the subscribe button on your favorite podcast app. If you've enjoyed this podcast, we'd also appreciate if you'd leave a review on the app too. Till next time.